So at last, the UK Chancellor has said that people should be investing more in the stock market and that the regulator and financial advisors have been focusing too much on the risk and not enough on returns. Why has she done this, and what is exactly the problem she's referring to in relation to the regulator and in relation to IFAs? Well, in relation to the regulator, it is this. The regulator requires that the most growth that a IFA is allowed to depict, or high growth, is 8% per annum. They are under almost no circumstances allowed to show you projections any more than that. Now you might think, well, that's good. It stops people from being scammed or being led to believe that they might do very well in their pensions and don't need to save as much. And of course, the major problem is that people don't save as much. Unfortunately, what's happened is that that's now become a target for IFAs. They just say, well, the medium case is 5% per annum. Forget the 8%. The regulator even says you should aim for 5%. Well, if they want to give you 5%, why don't they just shove 90% of your money in a bank account? That gives you 4.2% already at the time of speaking. And the 0.8% they could probably just get from, I don't know, buying Microsoft. Okay, so you can see where the Chancellor's coming from on this. Got a bit fed up. Now going to use the regulator to ensure people invest more. What about IFAs? Well, again, she feels they've been shackled to some extent. Well, again, I think the problem isn't that they've been shackled. I think the problem really with the IFAs has been they've started using the legal requirements as an excuse, just simply to say, well, that'll become a target for them. They'll just go for that. Whilst the Americans, just index tracking, have produced 50% in 2023 and 2024 compounded, combining those 2 years alone, just tracking an index. And if you assume that pension funds in the US didn't even beat that index, maybe only got 40%. You can see why the Americans have done significantly better. So will it be the era of greater investments into the stock market? Well, the danger is that, of course, again, this plays into the hands of the IFAs. They'll take your money, they'll still give you 5%, and benefit from higher fee income from the fact that more money is going to come to them. So they'll be over the moon that more money is coming their way. What we really need to do is mandate that there's certain minimums that they have to say they will achieve. And if they fail to achieve them, then they have to pay back all fees. Just as we do with bankers. We can recover their bonuses. So too with IFAs. It should be the case. Hey, there's a minimum